It's 1:27 p.m. Central Time on the 4th, and I'm calling a bear market, or at the very least, being out of a bull market now on this data here from October 3rd. I have to give it a full day to settle and make sure there's no changes, so it's been about a day and a half trading days, and you can see that the small cap went down under 10 and the large cap went under 10 and the mid cap almost went under 10. And let me indemnify Arthur Hill over at TrendVestorPro.com, as he came up with the original rules for the bull market, which I have completely reworked, and this was not used to call a bear market. So this is what I do with this chart, the high-low percent chart. And it's used in conjunction with the 20, 50, and 200 simple moving average chart. So we'll go look at those now with the 20 first. So here's the data for October 3rd in the 20 simple moving average, large cap here on top, mid cap in the middle, small cap on the bottom. And they follow the converse rules of the bull market. So if it's plus 80 up here, it's negative 20 down here, because 80 is 20 points away from 100 and negative 20 is 20 points away from 0. Actually, no negative involved, it's just 0 to 100 positive, so 20 above 0, 80 to 100 is 20. All three are under 20. And again, the last dot is for October 3rd, and this is the 50 simple moving average. And again, plus 80 to call a bull, plus 20 under to call a bear. So all three are under 20. Same thing in the 200 simple moving average for the large, mid, and small. The last dot for October 3rd is under 40. So this one uses plus 60 to call a bull market. So 60 to 100 is 40, and 0 to 40 is 40. And while you'll never see this call in the headlines, it has served us very well over here. And as I said, or to reiterate, that you could just consider this yellow flags flashing all over the place, or the harbinger, or the very starting signal of a possible real bear market that the mainstream analysts, traders, and investors will call it 20% drop. So the way I treat this is the same way as the bull market. When it made it into the bull market here, you waited for a pullback. You don't buy at the top. We're market timers here, and wait for that to come back, and then do some buying, and then let it take off, etc. Jettison some here, do it again, etc. Rinse and repeat. And you can treat this exactly opposite. So wait for it to have a nice bounce and see if it avoids going back into bull market, and if it doesn't, and we take it to the limit there as best we can to the upside, and then short or sell. So, yellow flags flying all over the place. Could consider it the start of a possible bear market soon, as the mainstream will call it. But let it serve as a definite warning shot across the bow